So the headline yesterday, this was at an investor conference, an industry conference. James Gorman said that Morgan Stanley's goal of generating about $1 billion in quarterly average bond trading revenue is too conservative.
Right.
That's not what we're hearing from other banks.
No, it is interesting to see how bullish he is on that specific part of the market. Now, keep in mind, and we've talked about this at this table a bunch, this year has been pretty good for that part of the business and that desk at a lot of places, especially at Morgan Stanley. And this is, and you guys have both spent some time with James Gorman, this is a sweet spot for them. They've invested pretty heavily, and notably in this story, they talk about electronic trading. They had invested heavily in equities and now investing even more heavily in bonds, it sounds like.
Absolutely right, but at the same time, having talked to a lot of people at Morgan Stanley, they also about 2 or 3 years ago did a consolidation in their trading. They actually let people go and put departments together, and it seems like they're doing so well, actually being more streamlined.
What I also found so interesting, and I understand that this is not FIC, it's just about bond trading, but a lot of other banks have come out with their FIC sort of forecast, and they don't seem that happy about the second quarter. They say, it's a little bit softer, not as good as the first. This in stark contrast.
Well, and this is also, and you alluded to this, David, I mean, Gorman has been doing some, pulling some pretty big levers over at Morgan Stanley rather quietly. I know you've sat down with him at length fairly recently. This is not a subtle overhaul. This is part of a series of pretty major moves that he's making. It looks like it's starting to pay off. That's a lot of money.